He pop this there. All right, guys, if you have any questions while I'm doing this, please type them in the live stream chat, just so we keep things going pretty smoothly. Searched around on Google some more, see if we could find any mean reversion strategies. And it looks like we got one right here. Let me pull it up. So yeah, this guy's thumbnail was basically the video, the rules. Simple Bollinger Band type mean reversion strategy. You can see it gives the rules: buy at lower band or sell at upper band. Take profits in the midline, 50%, and then take the rest of the profits at the other Bollinger Band. Simple enough. Let's whip this up real quick. Welcome screen. We gotta change it to new strategy. New strategy. Let us do Google MR2 for the conditions. It's going to be, we're going to be using the close. Trades enter on the close. So we're going to have to use the hive price in case it wicks back. We can't say, price closes above. We just want it to be basically touching the upper band or the lower band. If the strategy seems to be doing pretty good, then we'll add some additional rules to where we actually enter at the band, like in real time, instead of waiting for the bar to close. But for right now, we can just use the high. So the high is greater or equal to the Bollinger upper band. So high, greater or equal, upper band, plot it on the chart. When that occurs, we are going to enter a short. Let's go ahead and duplicate this tab. Now for the long side, it's low. So low is less than or equal to the lower band. And in this case, we're going to enter a long position. So it does want us to take off 50% at the midline and the other 50% at the other line. So that means we're going to have to enter in 2 contracts instead of 1, because the default quantity is 1. So we're going to do 2, and we're going to do 2 over here. Now let's open up a new set, and we're going to say current market position equals long. So we're currently long. Our current position size equals 2. Copy and paste. So we're currently long, position quantity is 2, and then the high is greater or equal to the middle band. Then we exit. Long position, we gotta set it to 1. There's that. Duplicate this tab. Let's do the other one now. Current market position equals short. Quantity is 2. The low is less than or equal to the midline. And now we're going to exit a short position, set it to 1. And so that gets us out 50% on the midline of each of our positions. But we still got some more. So let's go ahead back to this one and let's duplicate it. Market position is long, and now position quantity is 1 because we took 1 out. long 1. Getting confused here because we're currently long. It's the mid band. Okay, so yeah, long position quantity is 1, and now the high is greater or equal to the upper band. Exit long 1. We're actually going to set this one to quantity just because of like anomaly events that might occur. So let's set the quantity to the current position size. Very cool. Now let's duplicate this one. For short, position quantity is 1. Now the low, if I can click it, the low is less than or equal to the lower band. And now let's set that quantity to current position size. Let's make sure the other one's current position size. Hopefully I didn't make any boo-boos. The one thing I do want to do is set the deviation of the Bollinger Bands as an input. So we'll just say BP dev, make it a double. I think default is 2. Let's go back to the conditions, and now let's set that on all of our Bollinger Bands. Number of standard deviations. It was in fact 2. So once you guys, get pretty good with the builder, you'll be able to test out, random Google strategies like this just as fast. So let's go ahead and compile that. And let's check out the chart to make sure it's looking the way it should. I do want to optimize it just a little bit right off the bat. So we'll do 1, 2, 6, increments of 1. Let's do our index baskets, include commission, aggregate, max net profit. And let's just do last 2 quarters of 2022. Let's just start off on the 4 hour. No, let's do the daily. Let's do it because that's on the screenshots. He actually is doing this on the daily chart. Because mean reversion, to get the win rate you want, the mean has to be pretty close. Like if you're looking at just the candles, the mean looks very close. So to get enough profit, normally you'd use a higher time frame. That's kind of the reason why that's normally the case. Whereas if you go down to the 20 tick chart, you'll see it bouncing back and forth on the mean all day long, but those are extremely small movements, and you wouldn't even cover commissions. So let's do the daily chart, make sure things are working right. What in the world? NQ is kicking ass right out the gates. Let's check it out. why I only did 2 quarters on the daily chart. Let us go to the beginning of 2020 and get some more data. Chose the 5. So it chose the 5 because we're optimizing for net profit. So basically it said any deviation you choose, we're losing money, so you're better off just not taking any trades. It's pretty funny. So let's go down to the minute. Let's do the 4-hour chart. We can decrease the time period just a little bit. I just need to validate that it's working correctly first. Okay, here we go. So right off the bat, you can see it's exiting on session close. So we want to uncheck that since, I mean, right now we're on the 4-hour chart. So let's just uncheck that, run it again. Well, that is just really freaking good. Something's wrong though, I think. Oh yeah, there's an error with something. Okay. So we entered, let me go to the beginning. This isn't the first time I've encountered like this scenario where it'll hold one trade to infinity. But let's look at the first trade. So yeah, so the first trade, like I'm saying, we're only looking at if the low was less. It's kind of worst case scenario where like the low was way down here, but it entered way up here. But nonetheless, the low was less than the lower band. We entered long. You can see we exited for half our position. But what it didn't do is get us back out because it never crossed above the high. Let me see. Yeah, so he doesn't list a stop loss. So let me think for a second. Entering long, then we exit half at the midline. So this needs to happen either way. It's the other condition that would probably never happen sometimes due to how the Bollinger Bands are. So what we can do is set a stop loss for the entire position. Once the quantity is 1, so we will say current market position equals long. I think I already have one like that. Yeah, so we can just duplicate this. So we're long, position quantity is 1, which meaning we took half of our position off. When that happens, we're just going to risk the 10-period low for the rest of our position. So min, low, 10 is less Then the 10 period low 1 bar ago. So basically when price makes a new 10 period low, that's when we get out. So exit long position quantity. That was for the long side. And so for the short side, let's duplicate that. Short, we got 1 contract left. Now we're going to look at the 10 period high. So 10 period high. Period high is greater period high is greater than the 10 period high 1 bar ago. Make sure I did it right over here. Minimum, so the low is less than the low 1 bar ago. Exit long position quantity. This one is exit short position quantity. So let's make sure it is working correctly now. Now that we have an exit condition for our other contract. Cool. So this is kind of the reason why sometimes people will use like longer lengths for your Bollinger Band, or use Kelter channels, which you might do a variation using Kelter channels instead, because a lot of times it just won't actually break the high. You know, it just kind of, it won't break the low, the high Bollinger Band. It will just kind of stay away from it. But see here, we actually entered short in this burst of volatility, and then we crossed the mid band, closed 1 contract, and then you can see this line here is the 10 period high. And so once we broke the 10 period high, we got out. So this is actually allowing for potential fat tails. See here, it happens again. Exit 1, we got out once this, I broke the high right here. We got out in the next open. On this, we actually, if you can see, we're optimizing for the best deviation. So it tested deviations 1 through 6, and 3 gave us the best result. This is actually pretty good results. Yeah, we have almost a 10-to-1 ratio. We can look at the equity curves right quick. NQ did terrible, and then had a pretty massive recovery. Well, if you only started it like right here, it's actually a really nice equity curve right there, whereas this is bad. Like a random walk on RTY. It's cool. This is already doing much better than our other Google mean reversion. Let's go ahead and test out the 2-hour chart. But if you notice, gold ES didn't really do that well with our trend following strategies, but now these mean reversion is doing a little bit better. Whereas it was the opposite with the NQ. So it might be suggesting that the ES is more noisy than the NQ is. Let's drop down to the 60 minutes. Now the 30 minutes. So far, the 4-hour chart is doing better. You gotta keep in mind in this, we're optimizing the deviation, so whatever deviation it chooses is going to significantly impact the amount of trades for each time frame. Down to the 15-minute. Right now I'm just looking at P&L, P&L to drawdown ratios. Drawdowns are being a little bit dramatic. And let's test a 5 minutes, probably going to be as low as we go, and we will do something else. Okay, so 4-hour chart, definitely doing the best for us. So let's check out EMD, our best performer. So like I was saying, this scenario happens a lot. And originally the strategy wasn't designed really to catch those fat tails. So what we can do simply is say that this bar needs to be less than the value of the lower band on the previous bar. So that'll actually make this trigger instead of waiting for the 10-period high to be broken. So let's go back over here. So we can enter short, enter long, and there's that. Okay. So all we gotta do is say high is greater or equal to the upper band 1 bar ago. So it looks at the value of the upper band 1 bar ago, and then looks to see if it's greater than that or not. Same thing with this one. Cool. Now it'll go off, basically. We'll kind of execute the premise more efficiently, but now it's taking away that fat tail potential. We'll see how that affects the bottom line. So it chose the same thing on EMD. It's still 3, and now you can see what I was talking about right here. Now it does get out at this candle because this candle's low is less than the previous Bollinger Band value. And it actually decreased drawdown by about 3,000, but also decreased our profit. So 4 hours is still the best. Let's see how this impacts the other time frames. See if we can get a decent P&L to drawdown ratio. Mean reversion strategy is supposed to have low drawdowns. So this is definitely a potential issue. The issue being that we don't actually have a hard initial stop for our strategy. And then it allows for, things like this to occasionally happen, where price just keeps on going and never crosses below the midline. And so what we can do is just use once again the previous highs. But in this scenario, like if we would have entered short right here and say, okay, exit whenever price makes a new high, then it would actually close the trade on the exact same candle because the high is also greater than the previous high. So the way we can do this though is over here. We can take out the quantity requirement and instead do a bars since entry. So bars since entry is greater than 3. Actually, it could be 2. Let's do 2. So bar since entry is greater than 2. Bar since entry is greater than 2. And let's go ahead and compile that. We got 312 on 105. Pretty massive drawdown there. I need to make sure that it did it correctly. EMD just has terrible price action. It's so gappy. Just see an example. Okay, so here we went short. Price never closed beneath the midband, the mid-band, but it waits 2 bars, and then once we broke a new high here, it did close for the entire position. So capping the loss. See here we went short, waits 2 bars, here we made a new high, and then it exited right here. So it makes a lot of sense to add that rule so that we aren't just holding on to a losing trade when it just keeps on going on up. But it did not improve the bottom line. We can see if it improves our 4-hour time frame. So decreased profit, decreased drawdown, but now we finally have a ratio of at least 10 to 1. do the 2 hour. Okay. So let's try to execute this premise a little bit more how it was intended. I'm not sure if I'll need to change the way the strategy updates, but we're going to do price high is greater or equal yeah, so it's still the upper band. So now we just need to change how it actually executes. So we're going to do on each, we'll do price change. Going to take it down to just 1 year. Make the resolution, we'll do, keep it on 1 minute. I need to make sure that it's going to execute the way I want it to. it's still operating on bar close for some reason instead of operating intrabar. So let me see something else. Let's just say price. High is greater. Then the upper. Enter short. Just gotta test to make sure it'll do it right. So let's do profit target, total position. We'll say 500 bucks. Stop loss, 500 bucks. So high is greater than the upper band. Enter short. I need it to execute intrabar. Let's do a really small sample size. Tick. Now, give me 1 second. So I gotta do some different stuff apparently to get the intrabar granularity. But we can do something else. Let's go back to man, why can I not see that strategy? Okay, so we have two potential variations for the trigger. And so here's a band, here's a band. We can make our trigger whenever we get a wick off the upper band. Or we can just say we have to be above the upper band and we cross and we just close below the upper band. So in this scenario, price would need to open above and then close below. So we have basically a wick rejection trigger or the cross below trigger. Which one do you guys think will be better? You can just type in the chat. So I want to narrow down here on the trigger. Anis, you were too slow, man. First come, first serve. We'll definitely probably try out both. Let's try to get it going real quick. So for the first one, the wick, do high is greater than the upper band. Copy and paste, copy and paste. So high is greater than the upper band, but the close is less, and the open is less. So high is greater, open and close are less. So for the opposite, I'm gonna say the low is less than the lower band. The close is greater than the lower band. And the open is greater than the lower band. Upper, lower, lower, lower. don't think I need to change anything else, but we're going to find out. Let's go back to the optimization. MR2, 1 to 6, 240. Let's get 2 years. Let's make sure this is doing it correctly. It's exiting on session close. Let's uncheck that. So here you can see there was a wick entry. There's a wick, entered short. There's a wick on the bottom. Crossed over the midline, broke a low, got out. Here's a nice wick, cross the midline, close half, went below the previous band. Okay, so it seems to be operating correctly. Let's test on the 2 hour. Drawdowns are just too big. You can see when the bands are close together, it just looks like madness. Let's start getting some correlation on the hour of day analysis. Pretty much does better on RTH. Let's choose RTH hours, see if we get better results. It did seem like he was doing pretty good in the pre-market hours though. That did not give me the right hours. why it's only doing freaking 10 a.m. to. It's gonna do it manually. So let's add a little time filter. Let's just cut out the evening trades. So time is greater. a.m. and less than we're going to do 1 p.m. Ugh. How to set the exit time. Instrument settings. Okay, let's see. Just taking trades from midnight to 1 p.m. That is the exit time. Look at the entry time. Okay, let's go to the 30-minute. Yeah, I mean these drawdowns are just terrible. Terrible drawdowns. Okay, let's add in kind of the fat tail ability. Because fat tails always do better. So here where the position quantity was 1. Let's see. Yeah, just boop, boop. Get rid of both of those. That'll make it where we exit on a new high or new low being made. Back to the 240. I'm gonna take away these time filters. Let's see. That's just like a worst case scenario, basically, where the one candle is on the top and bottom of the deviation. So got a wick here, we close, there's the rest of it. So it is doing it correctly. I hate this strategy. I've just never liked Bollinger Bands. Like strategies that play off the Bollinger Bands, they just don't do good. The premise that price is supposed to go back to the mean once it hits a Bollinger Band, it just doesn't work. Doesn't work enough, at least. Premise is solid, it just doesn't happen enough, you know. Okay, let us run it on intraday time frames and see if we can get some correlation on the hour of day analysis. Probably going to do terrible in the 5 minutes. Let's just see. What is up with the lack of trades? It chose 6. It chose 6 because it sucks that bad. It's like you're better off just not taking any trades. Check out the 4 minutes. I mean, the premise is pretty solid, you know. Hit the other deviation and then take off half at the mean. Let the rest potentially ride. Really, what throws it off so much is the width of the bands can really mess things up. And you'd think it would, through optimizing, it would choose a higher bandwidth, but even with the higher bandwidths, it's not finding any way to be profitable. I got a better idea. Instead of running an optimization, let's just look at hour of day analysis, doing a brute test. Let's keep it on 3 on the 5 minutes. Okay, now we're getting to see some actual results. It looks like pre-market does pretty well. Well, honestly, Gonum, that's part of the issue. Whenever the bands are tight, then there's not enough range for there to be any profit. To actually be able to get any decent amount of profit, the band's got to be kind of spread apart. So in the 5-minute, we get some pretty good results pre-market. Let me make the bands a little tighter, perhaps 2.5. Moving in the wrong direction, let's choose 2. How about 3.5? $8 a.m. just dying. Looks like 3 was the best one. Let's check out the 4-minute. Really good in extended hours trading, which makes sense. Let's go back to 3. I'm just going to keep it on 3. Just out the other time frames. Okay, let's take it back to the, what was it, 4-minute chart, did really good. Yeah, so let's just do extended hours trading. Run it. Why did I not do extended hours trading? Just do extended hours. This thing is retarded. Why it being so difficult? Let's do it manually again. So time value, time series is greater. a.m. Less than 8:30. Same thing for the short side. I don't know which product I was, 'cause I guess I was only looking at EMD. Okay. Real quick, I guess we can try out the other trigger. Price crosses beneath the band and not just the wick. So to enter short, price close crosses below upper band. Say goodbye to the wick. Price close crosses above the lower band. Goodbye to the wick. Well, there wasn't any correlation going on with the hours. No, if I see any correlation with the hours, you know that across the indexes, it does pretty well during a certain batch of hours. Then I'll incorporate, a time filter. But right now, it's just been kind of random. There hasn't been really any significance. Let's see if the cross below does good enough. Damn. A lot more profit over here. Not in queue. Did I miss something? Next on section close. Let me make sure these executing right. It looks like it is. Cross below. Sold short. Yeah, so it actually reversed the position. That's what's happening here, because it never broke the low, so it just reversed. It's pretty interesting. Seems to definitely be a lot more value in the cross instead of the wick. ES and YM are bad. Could be worse. It could be not profitable at all. Sure, you wouldn't be complaining too much if I sent you $32,000. Let's check out the 120, see if we can get a better ratio. Like I said in the past, a lot of times products that aren't doing too well can actually benefit your portfolio. That's why the main thing you monitor is your portfolio metrics. If portfolio metrics start dropping off, then we can look at other, individual strategies, individual instruments. So the 120 actually gave us better results. Officially, you got a P&L to drawdown ratio. Of more than 10, which is actually kind of interesting. I'm tempted to try to cross the entire basket. Let's see if we can get better results on a lower time frame. So right now we're at 594 and 50. Can we break 600? No good on the 60. Nothing on the 30. No variations were profitable. Okay, I'm just gonna go back to the 120. And I'm just curious, I'm gonna test it across the whole basket. Maybe it'll just beat the orb out of nowhere. Because it made basically 600,000. I made 600,000 just on the indexes. So maybe it'll be like 1 million. It's like 20 more contracts. Going on, I'm gonna need you to specify some more. You can use a percentage in a lot of different ways. Oh boy, here are the results. Well, I don't really have a reason to see the percentage. Not sure if you think using a percentage gives you better insight or something. Yeah, so we didn't beat the orb. Worth a shot. I actually messed up. I actually optimized. I did not want to optimize, but even still, I don't. Just 16. Let's see. Top performer is NQ8, so it's the indexes, and randomly we got silver. Check out the NQ. All right. Well, let me look at where'd it go? Where'd it go? Oh. So here's another mean reversion strategy I found on Google. This guy said we calculate the 90-day moving average, Then we got the 30-day. When the 30-day falls below the 90, we go long back to the 90. And when the 30 rises above the 90, we short back to the 90. Simple strategies work better than complex ones. So we're going to make this one real quick in the next video. So I will see y'all soon. Let me get the next one going. Go ahead and finish this one up.